Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today, I'm going to start talking about guidance. In today's video is let's talk tariffs, and let's get into what public company executives should be doing if they're trying to communicate the impact of tariffs on their financial guidance. And it starts with the rule or the idea of less is always more. Tariffs are a fluid situation. They're constantly changing. They're going up, they're going down, they're coming, they're going. And this means that you need to give as little detail as possible and as wide a range as possible to communicate what's going on. That leads us to number 2, which is the goal here is to preserve the forecast optionality. And that means is that your forecast is fluid and changing just like tariffs are, and you don't know where you're going to land. But you don't want to have to keep changing guidance every quarter in a way that negatively impacts the stock price. And that brings us to number 3, that you're trying to avoid painting yourself into a corner that you can't change or communicate your way out of without driving shareholder destruction. So let's get into what you should not do if you're trying to communicate the impacts of tariffs on your guidance. And it starts with the idea of don't give multiple scenarios. The more scenarios you give, the more confusion you're going to drive into the market. Investors are going to be concerned because you're running multiple different scenarios. You're going to have to do multiple iterations of multiple scenarios that may or may not be real or may not be accurate. This puts you in a position of ending up in a situation where you are inaccurate or make an unnecessary mistake. Number 2, don't give complex scenarios. The more complexity, the more confusing it becomes for investors. When you've provided confusing scenarios with complexity, you're putting investors in a position where they're going to start creating their own narratives that may not be aligned with the narrative you're trying to communicate. And number 3, don't give lots of KPIs or lots of granular detail. The reason is the more KPIs you give, the more likely you are to miss one or more of those KPIs, which may put you in a position to miss your guidance or cause even further confusion or uncertainty or even worse, credibility issues with investors. And so this brings us to what should you be doing if you're trying to communicate the impacts of tariffs on your guidance. And it starts with the idea of keep it simple. Simplicity is your friend here. And there's 2 main considerations to be thinking about as you're doing this process. The first is be as generic as possible. You need to have very high-level explanations with not a lot of detail because that will help you preserve the optionality of your forecast and the fact that the situation is fluid. Number 2, use large numbers or as wide a range as possible because, again, you need to preserve the optionality of your forecast and the fact that your numbers are going to change throughout the year, and you don't want to have to be changing guidance in a way that impacts the stock price. So now there's 2 other things that you need to be mindful of if you're trying to communicate the impact of tariffs, and it's this idea of sandbagging numbers or kitchen sinking numbers. Sandbagging is where you're too conservative. Kitchen sinking is where you're throwing every single negative possible outcome under the sun into your guidance. And there's a time and a place for these levers. And as an executive, you have to decide, are tariffs that driver or catalyst for us to reset expectations, either lower if we're going to kitchen sink it or to be conservative or sandbagging. These are 2 levers you have to be very careful using and need to be judicious in determining if now is the right time to get back on the rails and change what's going on. Finally, what are the key learnings? It's this idea of always focus on preserving the optionality of your forecast. Tariffs are changing. Your forecast is changing. Everything is fluid. You need to communicate as generic and as wide a range as possible so that you don't have to keep changing your guidance every quarter and hurting your stock price. Thanks for watching.